Did you see it? Did you see what they just did? I want you to look me in the eye and tell me you didn't just witness a crime. If you blinked, you missed it. If you went to get a cup of coffee, you came back to a different world. We are talking about billions of dollars of notional value wiped off the ledger in a matter of seconds. We are talking about absolute, unadulterated carnage in the precious metals markets. Silver, the people's money, the historic hedge against tyranny, the only asset that has stood the test of 5,000 years of human history, has just been taken out back and executed. We hit $88, let that sink in, down from the highs that had everyone celebrating just yesterday. A vertical elevator shaft drop that has every retail investor shaking in their boots, panic selling their stacks, and handing their hard-earned wealth over to the very people rigging the game. You are watching your portfolio bleed out, and you are asking, is it over? Was the supercycle a lie? Am I the fool for holding on to this metal? They want you to feel that fear. They engineered that fear. This isn't a market correction, folks. This is a mugging. This is a crime scene, and the fingerprints of the bullion banks are all over the murder weapon. But here is the question that the mainstream media is too terrified to ask. Who is on the other side of that trade? When you sell in a blind panic because the chart looks like a waterfall, who is standing there with a bucket, catching every single ounce you drop? Is this the end of the bull run? Or is this the single greatest bear trap ever set in the history of financial markets? Buckle up, lock the doors, turn off the noise. We are going deep, and by the time I am done with you, you're going to be furious, but you are going to be prepared. Let's look at the damage, shall we? In the last 24 to 48 hours, silver didn't just fall, it was pushed off a cliff. We saw a 14% drawdown in a single trading session. We broke through the psychological floor of $100. We smashed through 95 like it wasn't even there. We wicked all the way down to $88.50 before seeing even a breath of life. Now, if you turn on the television, if you listen to the empty suits on CNBC or read the lying scripts on Bloomberg, what are they telling you? I literally wrote it down because I didn't want to misquote their incompetence. They are saying investors are taking profits amidst renewed fears of Federal Reserve tightening. And a strengthening dollar is putting downward pressure on metals. Give me a break. Taking profits? Are you kidding me? Who takes profits by market dumping $1 billion of notional value at 3 a.m. New York time when global liquidity is at its absolute thinnest? That is not how a rational investor exits a position to maximize profit. That is how a manipulator crashes a price to trigger a liquidation event. They are feeding you the official narrative. They treat you like children. They want you to focus on the CPI print. They want you to look at the 10-year Treasury yield ticking up 4 basis points and think, oh, well, that makes sense. Math is math. It is a lie. The math doesn't work. If this was organic selling, we would see a gradual distribution pattern. We would see a head and shoulders top. We would see a slow bleed. We wouldn't see a straight red line down triggered by a massive block order that exceeds the entire annual mining production of Peru. The media is covering for the banks. They are providing the cover story for a coordinated smash because they need an excuse to explain away the manipulation so you, the sheep, go back to sleep. But we are awake. We know that news doesn't drive the price. The price is driven by the algorithms, and the news is written afterward to justify the theft. Let's get under the hood, because the charts don't lie if you know how to read the language of the enemy. Look at this candle right here on the 4-hour chart. Do you see this moving average? This is the 50-day exponential moving average. We have been riding this line like a rail for 3 months. It was perfect support. Every time we touched it, the buyers stepped in. The algorithms were programmed to buy the dip. But look what happened at 8:45 a.m. We didn't just cross the line, we teleported through it. This is a signature high-frequency trading attack. These are not humans trading. These are supercomputers located in New Jersey, microseconds away from the exchange, running code designed to inflict maximum pain. They scan the order books. They have level 3 data that you don't have. They know exactly where your stop losses are sitting. They know that thousands of retail traders, people like you and me, had their sell orders sitting right below $98 to protect their capital. So what do? They dump a massive amount of paper shorts, futures contracts that don't represent real metal, just digital promises, to push the price just fast enough to hit that $98 trigger. Once they hit it, it causes a chain reaction, a cascade. Your stop loss becomes a market sell order that sells into a thin market, pushing the price lower, triggering the next guy's stop loss at 95. It's a domino effect of liquidation. It's a nuclear reaction of selling. Look at the RSI, the relative strength index. We were hovering around 70, overbought territory, sure, but we didn't just reset to neutral, we crashed to 18. 18? That is extreme oversold territory. This is capitulation. This is blood in the streets. And here's the smoking gun that nobody else is talking about. Volume. Look at the volume spike at the bottom of the chart. It is absolutely massive. But look closely. Most of this volume happened after the price had already collapsed. That tells me that the initial move was done on relatively thin liquidity to start the avalanche, and the high volume you see at the bottom, that's the smart money stepping in to absorb the panic selling. They triggered the crash to steal your shares cheap. The technical damage is severe, yes, we have broken market structure. But when RSI hits 18 on the daily chart, historically, that is not the time to sell. That is the time to mortgage the house, sell the kidney, and buy with both hands. This was an algorithmic flush designed to clear the leverage before the next leg up to heights you cannot even imagine. Now, let's talk about reality. Because everything we just looked at, those charts, those candles, those RSI numbers, that is the matrix. That is the paper market. That is the COMEX casino where banks trade promises of silver that do not exist. The price on your screen says $88. Go ahead, try to buy a physical silver eagle for $88 right now. Go to your local coin shop. Go to the big online bullion dealers. I checked 5 major dealers before turning this camera on. Do you know what I found? Out of stock. Pre-order only. Delivery in 6 weeks. And the ones that do have metal, the premiums just exploded. The spot price crashes, but the price to get metal into your hand goes a piece. Why? Because of the disconnect. We are witnessing the bifurcation of the silver market. There is the paper price, which is determined by high-frequency trading of futures contracts in New York and London. And then there is the physical price, which is determined by supply and demand in the real world. Look at the COMEX vaults. Specifically, the registered category. That's the silver that is actually available to be delivered against a contract. It is bleeding dry. We are at multi-decade lows. The vaults are empty. The banks are playing a dangerous game of musical chairs. They are selling hundreds of paper ounces for every 1 ounce of physical silver in the vault. They are betting that you, the investor, will never ask for delivery. They are betting you will settle for cash. But what happens when the whales demand delivery? What happens when a manufacturing giant like Samsung or Tesla needs physical silver for their electronics and solar panels, and the COMEX says, sorry, we only have paper? That is when the paper market breaks. That is when the price discovery moves from New York to Shanghai. You cannot print silver, you cannot print gold, you can print dollars until the ink runs dry, but you cannot print an ounce of ag. It takes geology, it takes diesel, it takes labor, it takes years to permit a mine. The paper dump to $88 is a desperate attempt to discourage you from draining the last of their physical inventory. They are trying to scare you away from the vault door because they know there's nothing behind it. We have to zoom out. If you are only looking at the daily chart, you are missing the war. And make no mistake, we are in a currency war. While Western investors are panic selling because of a scary red candle, what is the Eastern Bloc doing? What are the BRICS nations doing? China has been importing gold and silver at a pace we have never seen in human history. The Shanghai Gold Exchange is consistently trading at a premium compared to London and New York. This creates an arbitrage. Metal flows where the price is highest. It is leaving the West and moving east. Why would the Western banks smash the price to $88 today? Look at the bond market. China is dumping U.S. treasuries. They are selling American debt. When they sell that debt, they get dollars. They don't want those dollars. They are using those dollars to buy hard assets, commodities, energy, and yes, precious metals. The U.S. dollar, represented by the DXY, spiked today. Why? Because Europe is collapsing, making the dollar look like the cleanest shirt in the dirty laundry basket. A strong DXY usually pushes silver down via the algorithms. But this is the trap. The central banks know that the U.S. dollar is on borrowed time. The debt is $35 trillion and climbing. The interest payments on the U.S. debt now exceed our defense budget. The math is broken. The system is insolvent. The BRICS nations know this. They are preparing a commodity-backed settlement system. They need cheap metal to back it. Do you think it's a coincidence that silver crashes right before a major BRICS summit? Or right after China announces new stimulus? They are suppressing the price to allow the smart money and sovereign nations to accumulate physical assets at a discount before the dollar completely loses its reserve status. This isn't just a trade. It's a geopolitical transfer of wealth from the indebted West to the commodity-rich East. And you are watching it happen in real time, disguised as a market crash. Who pushed the button? We know the why, but who is the who? We have to talk about the vampire squid. We have to talk about the custodial banks. Look at the timing of this dump to $88. It happened exactly 48 hours before OPEX, options expiry. This is the oldest trick in the book, and they get away with it every single month because the regulators are asleep at the wheel, or worse, they are in on it. The commercial banks, the swaps, are heavily short silver. They have sold massive amounts of call options to retail investors. These retail investors were betting price would go up to $110. If the price stayed at 100 or 110, those banks would lose billions. They would have to pay out on those options. So what do? They coordinate a massive sell-off of futures contracts. They use spoofing, placing fake orders to create the illusion of selling pressure, to drive the price down below the max pain price. By crashing it to $88, all those call options held by the public expire worthless. They literally transfer wealth from your pocket to their balance sheet. It is a rigged casino where the house can change the rules of the game while the wheel is spinning. They did this to cover their shorts. They did this to stay solvent. They are terrified of the price running away from them, so they use infinite paper leverage to smash it back down. They are trapped in a short position that they can never exit without blowing up the financial system. So their only play is to smash, 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 and hope you give up. Listen to me closely, because this is the most important part of the video. We are at a bifurcation point in history. The drop to $88 is noise. It is a distraction. It is a test of your conviction. If you sell now, you are doing exactly what they want. You're handing them your real wealth, your labor, your time, your security, in exchange for their dying paper currency. You are trading constitutional money for Federal Reserve notes that are being debased at a rate of 10% a year. The fundamentals haven't changed. In fact, they have gotten stronger. The solar industry is consuming more silver than ever before. New battery technologies require silver. The mines are producing less because the grades are falling. The cost of diesel to run the excavators is up. The vaults are empty. The debt is exploding. Every single arrow points to higher prices, and yet the price crashes. That is not a market. That is a manipulation. And manipulation always fails in the end. My prediction? This $88 level is the bear trap of the century. We might chop here for a few days to scare out the weak hands. They want to make you bored. They want to make you depressed. But mark my words, once the physical shortage hits the headlines, once a major industrial user panics and tries to secure supply directly from a mine because the COMEX fails to deliver, we will not see $100 again. We will gap straight to $150. We will see a repricing event that will shock the world. By next year, as the currency crisis accelerates and the bond market implodes, I'm looking at $300 to $500 silver. Do not get shaken out. Do not let the criminals win. Go check your stack. Feel the weight of it in your hand. That is truth. That is real. The screen is a lie. The red candles are a psychological operation designed to break you. But you are not going to break. You are going to stand tall. You are going to buy the blood. Smash that like button to defeat the YouTube algorithm that tries to hide this content. They don't want this information out there. Share this video with everyone you know who is panicking. We are the resistance. We are the whale now. Stay strong. Keep stacking. Do not comply, and I will see you on the next one.